What if I told you there was a hidden AI tech giant that most people overlook? Not Nvidia, not AMD, not Microsoft, but a company building one of the most critical components of the AI revolution. A company growing faster than almost every other semiconductor maker, and yet trading at a cheaper valuation. Buying this stock could be one of those rare opportunities to get rich without getting lucky. Welcome back to Pie Uncut Market Insights. Today, we're diving deep into Micron Technology, ticker symbol MU. In this episode, we'll explore what Micron does and how they make money, why Micron's products are critical for AI, a breakdown of their latest earnings, future growth potential and risks, and finally, whether Micron stock deserves a spot in your portfolio. This is going to be a big one, so let's get right into it. Part 1. What Micron does. Micron Technology is one of the world's largest memory manufacturers. Their core products fall into three buckets. DRAM, Dynamic Random Access Memory. Think laptops, desktops, and servers. NAND Flash, the solid-state memory inside smartphones, tablets, and SSDs. HBM, High Bandwidth Memory, the rising star in Micron's lineup. Here's the crucial insight. Memory is no longer a commodity. For decades, memory chips were seen as cyclical, boom-and-bust products. Prices rose when demand outpaced supply, and profits collapsed when the industry overproduced. But that dynamic is shifting fast. Why? Because of AI. Artificial intelligence is pushing data workloads to levels the world has never seen before. Training large models like GPT-4 or Google Gemini requires massive amounts of data to be stored and moved around in milliseconds. Inference, the process of generating answers, also consumes huge memory resources. This makes memory, not CPUs or GPUs, the bottleneck in AI computing. That's where high-bandwidth memory enters the picture. Part 2. Why HBM is a game-changer. High-bandwidth memory, or HBM, is not just faster RAM. It's a completely different architecture. Instead of laying memory chips side by side, HBM stacks them vertically, connecting them through a shared hub. The result? Massive speed improvements and power efficiency. Data travels shorter distances, latency drops, and throughput skyrockets. This is why every hyperscaler and GPU maker wants HBM. Nvidia uses Micron's HBM3 in its Hopper H200 and Blackwell B200 GPUs. AMD integrates Micron memory into its Instinct accelerators, like the MI325 and MI355. Google's 7th-gen TPUs and Microsoft's Azure AI infrastructure also rely on Micron. Looking ahead, Micron is already shipping HBM4 for next-generation GPUs like Nvidia's Rubin and AMD's Altair MI400, both expected in 2026. Micron has quietly built a 21% market share in HBM, up from just 4% a year ago. That's a 5-fold increase in just 4 quarters. To put this in perspective, Google Cloud and Microsoft Azure each control less than 21% of cloud infrastructure. And here's the kicker. Micron is the only US-based HBM supplier. Its competitors, Samsung and SK Hynix, are based in South Korea. This gives Micron a strategic advantage when it comes to avoiding tariffs or supply chain restrictions under US industrial policy. Part 3. Market size and demand explosion. The market for AI-specific memory chips is expected to grow 9-fold over the next 9 years. That's a compound annual growth rate of 27% through 2034. Even if Micron simply maintains its current market share, it would grow twice as fast as the S&P 500. But given its recent gains, again from 4% to 21% in 1 year, it's more likely that Micron's share will increase, not just hold steady. In short, Micron is riding one of the most powerful megatrends of the decade. Part 4. Beyond AI, Micron's diversified base. Now, you might be thinking, what happens if AI demand slows down? Micron is more than just AI memory. Their chips also power smartphones and tablets, mobile DRAM and NAND, PCs and laptops, DDR4 and DDR5 memory, consumer electronics, smart TVs, gaming consoles, industrial equipment, factory robots and embedded systems, automotive, self-driving cars, sensors and ADS platforms, healthcare, imaging systems, and connected devices. So while AI is the growth engine, Micron has multiple legs to stand on. Part 5. Micron's latest earnings. Let's talk numbers, because numbers tell the real story. Micron's most recent quarter was a blowout. Revenue, $11.3 billion, up 22% quarter-over-quarter and 46% year-over-year. Full-year FY25 revenue, $37.4 billion, up 49% year-over-year. Earnings per share, $2.83, compared to just 79 cents last year, a 258% increase. By technology. DRAM, $9 billion for the quarter, $28.6 billion for the year. NAND, $2.3 billion for the quarter, $8.5 billion for the year. HBM, not broken out yet, but clearly driving the DRAM growth. By business unit. Cloud memory, $4.5 billion this quarter, up 214% year-over-year. Mobile and client, steady. Auto and embedded, modest growth. The standout, cloud memory. This is now Micron's largest business unit. It grew more than threefold in 1 year. That's the AI effect in action. Part 6. Why Micron is misunderstood. Here's where many Wall Street analysts get it wrong. They still think of Micron as a commodity memory supplier. But HBM is not interchangeable like regular RAM. It's customized, co-designed with GPU partners, and tightly integrated into their architectures. That means Micron's HBM is sticky. Once a GPU maker qualifies it, they're unlikely to switch suppliers mid-cycle. This creates a protective moat for Micron, something the company never had in its commodity DRAM days. Part 7. Risks to watch. Of course, no investment is risk-free. Micron faces 3 main risks. Competition. SK Hynix currently controls 62% of the HBM market. Samsung, after some delays, is ramping production again. Manufacturing complexity. HBM4 requires stacking over a dozen ultra-thin dies. Yield issues could delay shipments, just as we saw with Samsung earlier. Geopolitics. U.S.-China trade tensions remain a wild card. Export restrictions could limit sales or slow supply chains. That said, Micron is better positioned than its South Korean rivals because of its U.S. base and government support. Part 8. Valuation. Is Micron undervalued? Now let's get to the money question. Is Micron stock actually cheap based on fundamentals? Revenue growth, plus 46% year-over-year. EPS growth, plus 258% year-over-year. Forward PE ratio, around 10. Fair PE ratio, closer to 34, based on growth. For comparison, AMD trades at a forward PE near 30. Qualcomm sits around 18 to 20. Texas Instruments is about 23. Micron is growing faster than all of them, yet trades at a fraction of their multiples. This disconnect creates opportunity. Part 9. Investment strategy. So how should investors approach Micron? One strategy is dollar cost averaging, DCA. That means buying a fixed dollar amount of Micron stock at regular intervals, regardless of price. Here's why DCA works for Micron. It smooths out volatility in a cyclical sector. It ensures exposure to the long-term AI memory boom. It avoids the trap of trying to perfectly time the market. If Micron continues to execute, it could become a core compounder in the AI ecosystem, not unlike how Nvidia became the face of GPUs over the past decade. Part 10. The big picture. Here's the bottom line. AI is the most demanding workload ever created. Memory, not just compute, is the bottleneck. Micron is one of only 3 global HBM suppliers. Its market share is rising fast, and demand is locked in through 2026. Its stock trades at a steep discount to peers, despite superior growth. For long-term investors, Micron could be the hidden giant that delivers wealth without requiring luck. Closing. That wraps up today's deep dive on Micron Technology. Remember, this is not financial advice, just an analysis to help you think more clearly about where the opportunities might lie. Always do your own research or consult a licensed advisor before making any investment decisions. If you enjoyed this breakdown, hit follow on PiUncut Market Insights and share this episode with a fellow investor. Until next time, I'm Ben, and I'll leave you with this thought. The best investment you can make is in yourself.